Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we're going to be talking about Ripple and XRP, as well as the vast majority of crypto and finance. And with that being said, let's just dive in and let's start off with what is happening around the US dollar, as well as what I believe is about to happen around the entire world of finance. And it's not going to be overnight, it's not going to happen in a week, it's not going to happen in a month, but it's going to happen over the course of the next couple months and possibly even years. And when you see the US dollar is losing its reserve currency status, we have been reporting on this for quite some time, especially as a lot of nations are fighting back against the US dollar. But this is not a new thing. Going all the way back to 2014, we start to see Russia and China actually push away from the US dollar, which we will get to here in a second. The US dollar has been the backbone of the global economy for decades. Several countries even use the US dollar as an official currency, like El Salvador, Panama, and even Ecuador. In 1944, the Bretton Woods Agreement established the US dollar as the world's reserve currency. 44 countries agreed to a global monetary system that would be underpinned by the US dollar, which in turn was backed by gold. That system was done away with in 1971. Today, historically, the US dollar has been a safe haven for international investors. In times of crisis, money often flows into the US dollar as investors seek refuge from trouble in other economies. But 2014 was a huge turning point. Russia and China looked to shift the paradigm. They no longer wanted to rely on the US dollar for international trade and investment. This trend is called de-dollarization. And here you guys have from 2014, Russia-China signed deal to bypass the US dollar. Now, like I said, this has been happening for well over a decade. And even in 2010, actually, the BRICS started to stockpile a ton of gold, which we will get to on why here in a second as well. But today, more than ever, we have a lot more other nations questioning on why the US dollar is even still the reserve currency. Down here, we do see de-dollarization is happening everywhere. Central banks bought gold at a faster pace last year than they have in any year since 1987. This signals a desire for countries to back their own currencies with gold rather than the US dollar. Down here, today, trade is shifting away from the purview of the United States dollar. Take a look at how the volume of Chinese-Russian trade denominated in yuan has spiked since the start of 2022. And yes, here you guys have it. I mean, this has gone absolutely crazy. And then down here, other markets are shifting to the yuan as China becomes a more influential superpower. Again, here you guys have that report back in the end of March. With China and France completing their first yuan-settled LNG trade, signaling the end of using the US dollar for these energy trades. But this fight is far from over for the dollar. The dollar still dominates foreign exchange reserves, but that lead is slowly being chipped away. We do see down here, here's a chart from the Federal Reserve that shows how foreign exchange reserves have changed since 2000. The dollar has been slowly but steadily losing its share of foreign reserves. Again, we have been watching a lot of these metrics in real time as well. And we question ourselves, does this mean the US dollar is doomed? Not at all. It's still considered one of the most stable currencies, if not the most stable currency in the world. There is still a strong demand for US dollars, but now the dollar has some serious competition. And yes, this continues to grow and grow and grow. And today, more than ever, we are focused on the much larger picture. What is actually happening behind the scenes? Well, let's look at a few things. So first off, the banking sector. Is the banking sector safe right now? Absolutely not. I've been warning about this for quite some time. Going all the way back to the end of March, we've seen US bank deposits fell by $125.7 billion in the week ending March 22, or 22nd, if you will. Now, a lot of people think that this was moving towards crypto. Everybody thought, oh, look at liquidity is pushing into crypto, and crypto's about to go parabolic. It's going to go on a massive run, blah, 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 all that nonsense. We even do see that, like, going to move into crypto, right? But this is actually not what's happening. Where's the money going? Well, the money is actually going into money market funds. We do see trillions of dollars are draining out of the banks into money market funds. That weakens the banks. Fear that the banks are at risk is driving this trend and thus making the banks even weaker. And we do see down here, this trend will accelerate. This from Elon Musk. When you see Fed warns of silent bank run, listen closely to this video. It's about 3 minutes and 35 seconds long. By the way, I did include this in a video from the beginning of April as well, but I want to rehash this because of what I'm about to talk about.
Hey guys, on Tuesday, the Fed took a break from playing arsonist and played fireman, sounding the alarm that trillions could start draining out of banks in a silent bank run, implying yet greater several trillions could soon drain out of the U.S. economy. This could endanger the banks yet again, driving them yet again to the comforting embrace of taxpayers eager to sacrifice our life savings to cover their gambling debts. More important, and as a creative thank you for our generosity, this could crush the economy. In the Fed's paper, they looked at the past two rate hike cycles starting in 2004 and 2016. In each, they found a big jump, trillions, going from banks into money market funds. Now, money markets are like a bank account, a nice place to park your dollars, but this is key. Money market funds cannot be fractionally reserved. That means that while a dollar in the bank system is spawning roughly $3 more via fractional reserve, like hamsters, they multiply, a dollar in a money market fund is just a dollar. It's not quite as good as a full reserve bank. After all, money market funds still put your dollars in risky government bonds instead of cash, which is king, but they're close. In gory detail, in the 2004 cycle, money market funds doubled from about $1.5 trillion to $3 trillion. And in 2016, they rose 40%, from $2.5 trillion to $3.5 trillion. Why did this happen? For two reasons. First, because high rates mean the gap between what you make in the bank and what you make in a money market fund is bigger. You're losing more sticking with the bank. For example, in 2020, interest rates were about zero, and both money markets and banks also paid about zero. But with rates almost 5% now, money markets also pay about 5%, but banks still pay about zero. Second is fear. In the 2008 crash, and again during COVID, money market deposits rose because of fear the banks would collapse. After all, the kind of people who move billions in and out know it's a Ponzi. They know that banks are permanently bankrupt, living handout to handout. Note, both hike cycles were smaller than today. The 2004 cycle was about 4 points in 2 years. The 2016 cycle was about 2 points in about 3.5 years. Today's is already bigger than both, and that's in a single year with more to go. So now we have a perfect storm. COVID fear, epic rate hikes, and a 2008 all rolled into one. All right, what does this mean for the rest of us? More pain. The reason is that thanks to Wall Street's fractional Ponzi, every trillion going out of banks into safer assets like money markets perversely shrinks the economy by several trillion. The fractional reserve pretend money vanishes. So yes, the economy is living on risk. This shrinkage hits hardest in loans. With trillions less to lend, banks will stop making loans. They'll stop renewing loans. They could even call in existing loans. So businesses are strangled. Essentially, the economy shrinks from its current counterfeit fortified size down to its true size. The artificial boom, based on artificial money, deflates. Unfortunately, right-sizing the artificial boom means a lot of bankruptcies. It means a lot of layoffs, a lot of jobless. If you like your job, you cannot keep your job. Of course, the economy is already shrinking, even today, without the extra help. In Wednesday's video, I talked about job openings crashing. They're down 1.2 million in about the past 2 months, and fresh jobs numbers this morning are already looking grim. Toss in another couple of trillion, draining out in a flight to safety, and it could get bumpy. All right, we'll be watching. See you next time.
So yes, I do believe that banks are really weak right now. In fact, I think that the entire financial system within the US is extremely weak, which we've been addressing. But what is this all leading to? As we do continue to see bank deposits bleeding out, this goes all the way back to 2021. You can see the deposits rising, and all of a sudden, boom, we start to see a major decline. Especially, this happened around roughly, I would say, the beginning of 2022. It really kind of started on that downtrend. And even today, more than ever, I think that March really kind of pushed this to pretty significant lows. And this is going to most likely continue to fall more and more. And as we do look at banks currently, yes, we are going to see tighter lending standards, which should lead to the credit crunch in the coming months. And we know that credit right now, I mean, the credit market is ridiculous. And as we even look at debt as well, like debt is absolutely skyrocketing. So it's all extremely unsustainable. But what is this all leading to? What is the end goal here? Well, I do believe that we will see a full-on new monetary policy and system. we are going to see the birth of the Bretton Woods III. And in fact, I actually think that this is already beginning. I told you guys to go and read about this because I think that what we are currently seeing is an entire restructuring of our global economy. We do see the birth of Bretton Woods III. This got posted back in April of 2022, a commodity currency revolution. And as we do see down here, a mere 5 decades ago, the dollar took over the role for itself as the global reserve asset from gold. Since then, the global economy has become increasingly financialized with the advent of first regulated derivatives, then hedge funds, and also dot-coms, followed by an explosion in over-the-counter unregulated derivatives and securitizations, ending in Lehman's failure. All that seems to be coming to an end with a new commoditization hastened by the commodity crisis from current geopolitical events, what renowned flows analyst Zoltan Passar at Credit Suisse calls Bretton Woods III. He argues that we are witnessing the birth of Bretton Woods III, a new world monetary order centered around commodity-based currencies in the East that will likely weaken the euro-dollar system and also contribute to inflationary forces in the West. There's a lot of questions tied to this. There's a lot of things on how this will essentially work, but we are starting to see the rise of this. And the big question is, what does this pertain to crypto? Well, going back a little bit ago, this got posted around 2 months ago, and it says Bretton Woods III and crypto. This is actually from coinmarketcap.com, and it's in their blog post. So this goes in depth on a few things and the idea on where we could essentially lead to within this. So one, we do see from the Bretton Woods era backed by gold bullion to Bretton Woods II backed by inside money, treasuries, and also treasuries with unhedgeable confiscation risk, to Bretton Woods III, backed by outside money, gold bullion, and other commodities. After this war is over, money will never be the same again, and Bitcoin, if it still exists then, will probably benefit from all of this. Now, in terms of Bitcoin, obviously, I don't think that Bitcoin's really going anywhere, but I do believe that there's going to be a lot more utility around crypto, and I do think that crypto will become a key player around the entire infrastructure for this new system, which we've talked about many times in the past, but we do look at a few things around this. So here we have, where does Bretton Woods III come from? So this theory has been pushed quite a bit around the last couple years, but we do see the current monetary order is based on the strength and liquidity of the US dollar. Its strength comes from the financial markets in the United States, being the most mature and open in the world. Its liquidity is backed by the depth of the dollar market as well as the depth of the euro dollar market. Euro dollars are dollars created outside the United States. Think of them like a fiat version of USD stablecoins. Thus, even though the dollar is not backed by anything, it is the most trusted fiat currency in the world. Now, the big thing that we've been addressing is the petrodollar. Bretton Woods II, a monetary order that backed fiat currencies partially with gold, fizzled out in the 1970s following Bretton Woods II. Capital flows around the world increased. Most of these capital flows were in US dollars. The oil trade, being almost exclusively in USD, played a significant role and established the petrodollar. Now, as we do question that deal, and as we do question on if that deal is even still in play, I do believe that this is going to be the event that pushes us into the Bretton Woods III catalyst. We do see over time, the US became a net importer of commodities and consumer goods, while other countries and regions became exporters of commodities, Middle East, oil, and consumer goods, China, stuff. These exporting countries got paid in dollars and recycled them by investing in US equities, stock market, and US Treasuries debt. All was going well until, well, here you have, US effectively freezes Russian central bank assets held by Americans. This was the big event that was the catalyst for it all, sanctions. Now, once we did see that, okay, that's when we start to see a major push back against the US dollar. So now what we are seeing is they expect the appeal of outside money like gold and commodities to rise at the expense of inside money, confiscatable assets like the US Treasuries. And this is essentially how it could play out. So here is the predictions. Inflation and interest rates in the US will rise. The demand for commodity reserves will rise, which we are seeing this already. The demand for foreign currency reserves, particularly those of geopolitical rivals, will fall. The demand for dollars will fall because non-dollar trade will rise. Supply chains will become less efficient and thus more expensive. The EU will get energy commodities from sources other than Russia. Russia will sell more to China, and the Middle East will sell more to the EU. the world will go from our currency, your problem, to our commodity, your problem. Commodity exporters will increasingly demand payment in non-USD terms. Deglobalization will continue. Countries will hoard commodities to become more autarkic. And then as we do scroll down, he doesn't predict a collapse of the US dollar. He foresees a decline at the expense of other currencies. As a result, multiple global currencies may compete, some partially backed by outside money like commodities and others backed by inside money like credit. So we do see, has Bretton Woods III already begun? Hard to say. Prediction: inflation and interest rates in the US will rise. And here we have true. Here you have the truth of that matter. And then down here as well, the demand for foreign currency reserves, particularly those of geopolitical rivals, will fall. Reality: true. All of this is happening. Pretty much what we are seeing is already the rise of this. We're already kind of seeing this happening before our eyes. And I would argue that as we look at Bretton Woods III, what does it mean for crypto? What does it mean for Bitcoin? What does it mean for all of these major currencies? Well, one, I believe that they will 100% benefit value-wise and also even demand-wise. I also believe that we will start to see a lot more leveraging of cryptocurrencies. Like, for example, we do see down here, can America leverage cryptocurrencies to support the dollar? The dollar milkshake theory made the bull case for the dollar. Bretton Woods III outlined the bear case. But is there a crypto bull case somewhere between those two theories? Possibly yes. We've seen parts of both theories play out already. The dollar surging higher and states buying up gold and dealing in other currencies. The latter is particular suggests that these cryptocurrencies could play a bigger role in the changing world monetary order. And I do think that that's exactly what we will see. I think that as we look at what's happening around the system, we will see currencies backed by gold. We're already kind of seeing this. We do see over here just in Zimbabwe to create new digital currency backed by gold. Over here, we did see Russia's largest bank turn to sites to gold-backed digital financial assets as well. A lot of this is going to be tokenization. A lot of this is also focused on de-dollarization as well. And it seems as though they are turning to DLT, as we do see down here. It noted that the DFA would be issued and circulated using distributed ledger technology, with the volume and price determined by real-life gold prices. Yes, you could still have things issued out on DLT backed by gold, which I do think is going to be the case. I think that we are going to see a major shift happening around digital currencies, around cryptocurrencies, and ultimately around commodities as well. And we're already seeing that. Zimbabwean gold, the Reserve Bank of Zimbabwe, is set to launch a gold-backed digital currency in the effort to reduce the reliance on the US dollar. As a nation grapples with soaring inflation, Zimbabwe permitted its citizens to utilize gold as a legal tender for nearly a year. In a strategic move last August, Zimbabwe announced incentives for its biggest gold mining companies to surpass government-established production targets. Finally, in October of 2022, we learned global mining companies operating in Zimbabwe were required to pay a portion of their royalties in refined metal rather than cash, a slow-moving golden train. And then also, over here, the Zimbabwe government would like to join the BRICS. The country will soon introduce a gold-backed digital currency to stabilize its local currency. Countries in BRICS or looking to join are stockpiling gold. The dots are starting to connect for all to see. And yes, this is exactly what has happened. This is why we have been focused on this. And it's all reliant on the fact that central banks have been stockpiling massive amounts of gold, preparing for what we will like to say is Bretton Woods III. And I do think that crypto will play a vital role in all of this. And I do think that DLT could essentially become the infrastructure for a lot of these payment mechanisms, as well as the global economy, which I know to some people that might sound crazy, but ultimately we do see Russia utilizing DLT for these digital gold-backed currencies, which again is extremely bullish for those that know what DLTs are utility-based and providing a lot of this value, which we've talked about many times on this channel. I believe that XRP could also become a very large piece of the puzzle by becoming a bridge currency. But also, we do see in February, central bank gold reserves rose by another 52 tons, according to the latest data compiled by the World Gold Council. It was the 11th straight month of central bank net gold purchases. Through the first 2 months of 2023, net central bank gold purchases came in at 125 tons. This is the strongest start to a year since 2010. Again, this is why we have been focused on Bretton Woods III, because a lot of this seems as though we are moving towards a commodity-based system yet again, And it seems as though it's not going to be the same as the one from, back before 1971. This is going to be much larger, and it's going to be based around digital assets, digital currencies, crypto itself, and it's ultimately going to be a major push back against the US dollar and the reserve status of the US dollar. So with all of this in mind, I do believe that we should all be preparing for what's to come. I also believe that the banks are not safe. I don't think that you should be holding all your money in bank accounts. I don't think that the banks are going to be, that strong ever again. I actually think that banks are going to start to crumble this year. I don't think that we are out of it yet. I've talked about this many times. I think that we are starting to see a lot of money draining out of banks and going into money market funds and other areas of opportunity. I also think that crypto is seeing some of those flows too, but I don't think it's as much as most people are making it out to be, but this trend is definitely going to be continuously accelerating. I do completely agree with Elon Musk down here. And, this is the start of something much larger. I think that we are starting to see a major pushback against the US and the US dollar. And I think that we are starting to see the evolution of our entire global economy. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on because I'm more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. It says up that you all have a beautiful day or a beautiful night. Wherever you guys are on this beautiful world, this has been Nick. Peace out, guys.